Good afternoon, everyone. This is Ed Kurtz, Notional Ed with Contemporary Wealth Management. I'm here with my partner, Raging Bull, Brian Barrera, and the illustrious Sweet Bobby Gaines from the Trader Nerds Discord.
And there's Mo closing the door because she's like, I don't want to hear Ed. I listen to him like 24 hours a day. I don't want to hear his nappy voice anymore.
You're just off camera. All right. She'll freak out when I say that's on camera. All right. Anyway.
You were off camera, Mo. You were off camera.
So we're here with Bobby, and Brian and I both started another Discord shortly before we got involved with Bobby's site. I joined Bobby's in January of 2022. Started doing a lot of content posting,
and they said it would never last, Ed.
Yeah.
I think I started posting a lot of commentary around March or so, and then that summer you flipped to a pay model and made me a moderator, and I went through your Discord your mentorship program, and it's been quite a learning experience in your Discord and the other ones I've been in, and I'd have to say, I initially cut my teeth in this other one, but really jumped in up to my neck in Trader Nerds, and Brian was in the other Discord where I was, and then joined Trader Nerds. I didn't know Brian until he got into Trader Nerds, and he started with his small account that he's grown incredibly well.
65,000, yeah.
And kind of we gave him his bullpen, Raging Bull's bullpen room in Trader Nerds, and
hey, that's interesting, Brian. How much did you grow it? How did you grow it? What did you say? 65,000.
I started with $4,000 because I knew it was about the minimum, and then throughout the year, I think I stopped in 2022 with about probably 13,000 after it was all said and done with deposits. And when I started tracking was in September. I think I ran up about 18% in 2022, and then I started with 36,000 in the beginning of 23, and I kind of rode that until November when I deposited another 13,000. So I'm sitting at 65,000. Last year we made 41% in that account, so not too bad. But yeah, I'm sitting at 65,000, but there's a lot of deposits in there. But all in all, I started last year with about 32,000, kind of ran up.
41%. That's awesome, though, man. What was you do? You were doing the 112, and you were doing what else?
What else? Just scheduled 112s, and I actually started the first quarter up until March with some strangles incorporated. So I was running about 50%, total, and I was doing half strangles, half 112s. But I cut those the first quarter and started just doing 112s on the schedule and kind of never looked back. March is, Volmageddon, whatever we want to call it. That little uptick we had in volatility kind of spooked me out of the strangles. And, even when the strangles were paying good for me, they were always kind of on the 112s were always my, go-to, even though the strangles were paying out a lot of money. So pretty much strictly just doing 112s in that options account.
Well, it was talking with Ed a lot that is kind of the reason, one of the big reasons that I started doing the campaigning of trades rather than just doing totally reflecting on
a big spew in your Discord, kind of saying, what I was showing. I remember you're saying, I think we'll do the same, and I just wanted to be like, I think you need to take a look at this, and I'm actually going to give you the credit because in 2022. When I was watching your videos every day, you were showing your Tastyworks account, and every day your Tastyworks account, which you really didn't pay much attention to, was going up. And your go-to was like, I'm not doing anything over in this account. I'm just kind of sitting on the money and it's going up, and I don't do anything. I'm not taking the trades off. And that's kind of when I was messaging Ed a lot, talking. I'm like, why don't we take a look at Bobby's account? He's showing you the numbers at the beginning, and that account, is going up every day. I'm like, what's he doing? I'm like, he's holding on to these trades. So, it's kind of watching you with the whole scheduling or not really paying attention, which comes down to the scheduling part, kind of made me know that you kind of got to hold on to these trades a little bit. So, scheduling, I think, is for me the way to go. I'm always on the go. I got a pretty much 50-hour-a-week job, and, I can't be kind of how you say in front of the screen all the time. So for me, I got to keep it simple. Trade goes on, once, twice a month, and kind of go at that. So,
yeah, and I think. I was going to say, I think all three of us are scheduling and campaigning. We're definitely campaign traders, whereas, a lot of traders are not campaign traders. They just want to be very selective with whatever underlying they trade, and they may move from one to the other and just stick to one or two.
Yeah.
Put them on according to metrics. And Bobby, you know, I love the Greeks and the metrics, and it's been interesting to evolve into this scheduled trading
Oh,
thing
yeah.
where the metrics, they come into play, but really what comes into play more is scheduling your trades and having that max number and spreading them out over the life of you know what you think when you put that first one on for the second batch, you know, how many is that and how much time is it? And we focus a lot on that. And then the metrics are secondary. So if it's time for me to do another trade and I'm either notionally over or my metrics are backed up, which frankly for me doesn't happen very often, I have to pause. So the metrics aren't worthless. They just become secondary versus, you know, maybe a year and a half ago, the metrics were it. Like all we watched were the metrics. We didn't
Oh, that's
really
it.
have a great plan for putting trades on a certain pace, so to speak. And I used to always say, go slow at the beginning, go slow at the beginning. And that's because you had no protection on the account at all as it started. And things were more volatile when the positions are new and they become a little less volatile. Um, and lower positive delta, so to speak, as they age. And yeah, it's just been kind of interesting that I guess the three of us are sitting here and we all do things a little differently, although we pretty much can have the same conversation.
Yeah.
Well, I've never had an original thought in my head, right? I'm always, I copy everybody else's ideas
Yeah.
because I never have the good ideas. It's always someone else. My ideas are stupid, right? I come up with the triple nipple donkey. I come up with all this other garbage. And then at the end of the day, right, it's like, hey, that didn't work. So we got to go back to something that someone else has done. So
Well,
that's the
you
beauty
know what
of
you
it.
keep coming back to, Bob? You did this in 2022. You started running the campaign like you're running right now. And then, like you said, you got into the triple nipple donkey at the beginning of 23, and you kind of, I say, lost your way a little bit, which I think you can admit. And then, you know, you seen, I kind of went on that little rage with my post and your thing about how I'm doing it and how it's kind of, what I'm saying is when you schedule these trades, while the Greeks are super important, you got to watch them. I just feel like if you get these campaign correctly, your Greeks kind of fall into line. So, you know, your buying power kind of has the range. And I think you're seeing that if you know, with how you're doing it now with your scheduled trades that you know, your grease kind of fall into place too if as long as you know schedule them out right. So yeah, I think that's the gist of it. What scheduling is, you know, while you do look at your Greeks and then more importantly your buying power, just the schedule itself will keep all that in line, I think, you know, if you schedule them out correctly, if you're not over, you know, stretching it. So
Well, for example, if my theta were low on any given day when I'm just starting out with a new account, then I would go, okay, well, tomorrow it's going to be low too. So I need to put on a trade. And the next day it's going to be low. I need to put on a trade. So what scheduling has done is forced me to look 15 weeks into the future. So if you're like me and we're doing these 120-day out 112 trades, after 15 weeks, I'm taking off a trade and then putting on another trade. So what it's forced me to do is to look out 15 weeks, and I kind of came up with a sizing spreadsheet that shows me how much I should put on, you know, per week in order to have a fully developed campaign out, you know, at 21 days left to expiration, where I'm actually taking those trades off and just putting new ones on.
right.
And I'm smiling because you released your spreadsheet like Brian had his, and we're so tiny.
I had a calculator built in for a little
And-
while, and I was like, "Do we
yeah,
release
and
this
then
yet, or
you
do we
released
teach?"
yours, and Brian's like, "Oh no," he kind of like almost beat us to it. I'm like, "It's okay," you know. And
Brian,
I run
just take my spreadsheet and say, hey, I came up with this first and Bobby stole it.
it's definitely a lot different than yours, but I was running a spreadsheet even last year. Not even a spreadsheet, it's a calculation that says how much, you know, I can pretty much put on my max trades, you know, how many I can have at any given time. And I just divide that number by 3 because, you know, like you're saying, you know, I hope to be out of these trades in 90 days. So pretty much the allotment I have, I just divide by 3 and I'll give me my numbers. And I've been running that for about a year now. And I actually made a calculator, about 2 months ago, Ed, knowing we're going to be starting our Discord. And I was like, well, I'm not going to release it. Let's kind of keep it on the back burner, give something to, you know, release as like a version of the spreadsheet, and let's teach them how to do the math, like you say, on a napkin first before we teach them, you know, using a spreadsheet and just simple formulas. So, well, I didn't want to give this, you know, that away. I'm like, well, maybe it does make it a lot easier, so that's why we kind of released it. But yeah, that was kind of a little inside joke. Like when you release it, I was already on the verge of releasing it, And I'm like, we're all on the same page here because it's a lot nicer having a spreadsheet,
Well, instead of teaching people to write it on a napkin, the way that I come up with new ideas, it's better to write it on a piece of toilet paper because chances are they're going to be throwing it in the trash very soon.
Yeah, that's true.
Because a lot of my ideas don't pan out, so to speak. But that's what having a written trading plan has helped me with.
Yeah.
Is having the written trading plan with me being an undisciplined trader has really, really helped me to be such more disciplined. And remember, the way that I went to the 111 and 112 trades exclusively is we were throwing everything out there. Remember, we had broken wing butterflies. We were doing, I think strangles and different things. And when 2022 was happening and the market was going down, all of my trades were just sucking. And then we discovered, hey, wait a minute. While everything else is sucking, this 112 was doing just fine. And my 112 trades, had I done nothing else other than that in 2022, would have been up 24% when the market was down 20%.
Well,
So I knew there, hey, this is a trade that could do pretty good. And then I didn't get nowhere near your 41% this year. But of course, I was doing triple nipple donkey and, like you said, sidestepping and doing all kinds of stupid stuff. But we still squeaked out at 20% for 2023, which I thought was phenomenal.
yeah.
It really is.
Yeah, because think about it. Bernie Madoff, y'all, was attracting capital at 10 to 12% a year, even with fake trades.
Yeah, blindly doing it.
Yeah. Yeah.
That's what always makes me think too. Like, what's the catch with what we're doing? Well, and the catch we know is you're running an extremely leveraged amount. So I guess the catch with that. But these people that were investing the money to make the 12% or whatever it was, they had no clue what they were doing. They were just happy to make their 12% every year. So that does always make me think, what are we doing differently? Which it's using leverage. That's where you're saying about the 112 is great, but on the leverage aspect, you kind of got to watch. So using that put debit spread. It does give us the cake and let us eat it too, but kind of the other side of it is we're running a higher notional value. So,
and I have my naysayers too, right? I just got a YouTube comment just minutes ago before we went on. It said newbie trader. This is on one of my the deconstructing the 112 trade. Comment here says, newbie traders beware. What he doesn't tell you is the difference between probability and expectancy. In other words, this system works until it doesn't and blows up your account. So,
it's not. What we're doing, that's why we're working on these hedges and stuff. We're definitely playing with some stuff here, but again, that's what we're doing for the last couple of years now, all together. Different discords. We're all still trying to get to that point of the happy medium of a hedge, using leverage and kind of getting it nailed down. So, we use that 14 DT hedge. I don't think Ed's using it yet, but you're using your black swan hedge again. So, we're all kind of trying to get that nailed down somewhere, one way or another. So
you're the king of the 14 DTE hedge. Kind of share with me what you're doing there.
Just simply, using my net lick, and we were always with your VIX hedge and stuff. You do 3%, and when we're breaking down numbers, I realized using a leverage like we're doing, you can't really use 3% as a decent hedge. So I'm actually using up almost percent a month or 12% annually. I'm dedicating just to this 14-day hedge. So every Friday, or you can pick, like we're talking about, any day of the week, I go out there and I buy, I try to stay between a 2 and 5 delta. I'll buy as many puts as I can for about 1%, or it's about 0.25% a week is what I'm allocate to the 14-day hedge. So pretty much every Friday I'll go out, I got my net lick. I got a little cheat sheet on my spreadsheet that'll take my net lick from the prior day, or if I type in that, the amount that I'm actually currently at, and it'll spit out, let's say $150 for a 0.25% of my portfolio. I'll simply go out and buy a long put for that amount. As long as it's not, I always stay around the 2 standard deviation. So if I'm getting a 6-7 delta, I'll simply drop down and I'll buy two of those long puts, and it'll drop me back down about 2 delta on that 14-day hedge. It's kind of it in a nutshell. So pretty much I'm donating about, I'm contributing about 1% a month to this hedge. But again, I'm asking 40% like I did last year out of the account. So
now, were you doing that hedge during pretty much the entirety of last year?
Started in May.
Okay.
I shared my spreadsheet in your Discord. My buying power on average, which I got an average of my buying power, was at 38 point some percent of what my average buying power was all year. So as we know, putting these hedges on helps with the buying power. I'm still not allocating more money towards it. I'm simply selling enough premium for about 3% a month, profits a month, and I'm simply selling 1%, or I'm buying, 1% worth of hedges to hedge that down. So, I'm averaging about 2.5% a month. Obviously last year with October was a good month. We hit some tents. I was able to close for some profit. So October itself was a nice juice to the account. But yeah, so pretty much I'm trying to sell enough premium for about 3% a month, and I'm taming it down with about 1% of hedges.
And Brian, how are you determining that? I mean, I love that. I love what you're saying is I'm willing to throw into the mouth of the volcano. I'm like, it'd be like us, like if we were back in the days when we would sacrifice people, you and I would throw Ed into the volcano and think that all would be fine, right?
So what would they give us for Ed?
Yeah, what would they give us for Ed?
You need to sacrifice more than me for your
I started doing like 3%, 6%, and then I started modeling out with Tasty Trade. They got the analytics tool and analyze tool, and it just wasn't enough. So that's why I'm like 1%, and even that's kind of it's going to be good. But even with that 1% hedge on, I still got to take a position off for me to get down without taking some significant drawdown. So it gets your Greeks tamed. And again, if we can stay in these trades and not have to get flushed out of them, which is kind of what I was rambling on months back whenever you caught your attention. If we can keep these trades that we put on, and not get flushed out of them, we're going to hit our goals. If we sell X amount of premium and we don't, we already know this trade's of what 90-some% probability. If we are overstuffing and have to take all of our trades off because our buying power is going excessive, that's where we're going to get the problems. If we can get these campaigned and not remove a 1-1-2 trade or whatever we're trading, and we can let the probabilities happen, we're going to make what we sell. So that's kind of where I'm at. And I think any losses we get are going to be made up with the put debit spread. So I think if we get any losses, we still should be hitting that 20-some%, 30% a year.
So are you doing something like, let's just use round numbers for example. So you're saying that I need to make, or I'm trying to make $1,000 a month, and that's going to be the 2% profit or the 3% before I toss in the hedge. So you're doing that. So are you then saying I need to sell $1,000
with a $65,000 account? I can sell 2 ES 112s and Tasty Trades. So Tasty Trades about $6,000. Per my spreadsheet and the math, I can run. It's saying like 1.8 ES 112s a month. So I'm bumping up to 2. I can either do 1 ES 112, week 2, and then the following trade for the month I can do 8 MES 112s. But I'm still my metrics right now. I'm running less than 20% buying power. So I can run the 2 full ES 112. So pretty much those itself gives me about 3.3% return doing those 2 ES 112s a month if I collect 90% profit. So with that, like I said, I just simply take the cost of doing business, like you say, a 1% out of that, and I buy my hedges with that. So people like to put these other trades on. I think that's what that Black Swan hedges are kind of putting these long puts on. Or you're incorporating yours with your 112 now, huh?
Yeah.
So you are kind of still trading 112, but for me, I'm trading my premium, and not to get too much into my past, but I'm a buy and hold investor, so you know what that is. I'm happy with my 12% a year. So for me, giving a percent up to hedge my account, I don't need to put on extra trades to kind of hedge my account because I still think 2% a month average is a healthy return. So if that makes any sense, go ahead, Ed.
I was just going to clarify that because I know what you're doing. I mean, you take about 10% of your liquid net worth.
Yeah.
You're trading the leverage stuff, and the rest of it you're basically doing buy and hold for the longer term. You're in your 30s. It's treated you extremely well over the last 10 or 12 years.
Ed, you're in your 30s too, right?
Yeah, times 2. Yeah, I mean, you're not taking your big account and going all in with all of it.
Yeah, I don't know. I'm diversified into other stuff, not just futures and options. Some people do options, so that's a whole different thing strictly. So for me, even with this account though, I don't try to get greedy making 3-4%. I am trying to target a premium of 3% a month, but again, I'm trying to downplay that with 1% going to my hedging, and I still think I could probably do a little bit more to be on the safe side. So
I mean,
that's
what a great business, though. I mean, Ed and I have been in real estate before, and you think about, I was sued by tenants. I've been, I had to deal with cockroaches. I had to, Ed's going around spraying the place for bugs, and you got tenants that hate your guts and think you're just a greedy landlord. And then to be able to do something like this, where you go, oh yeah, I'm buying hedges, I'm doing, and it's so awesome because we don't have to deal with people at all, really. I mean,
that's where I got my room with yours. Like I said, I got my job, and I try to make it as simple as possible. I don't, my job is a paycheck, but obviously I love to sit back here and talk to you guys all day and trade, but I need to be able to continue to grow. So yeah, I mean it is great to be able to sit back and I know Ed wants to get rid of his real estate and all, but and I want to get rid of my day job. So this is kind of the end of it, but we still got to put the time and effort in
and I told Ed not to burn it down and just collect the insurance. Ed, that's not the way to go. In case you were thinking about it, even though in 2008 I had those thoughts, I got to tell you.
I'm not touching that one, Bobby.
better not to say anything at all, right?
So how many? And I have two that I'm about to list. So things are happening. I'm just going to leave it at that.
Yeah. So Brian, how active watching the screens are you doing every day?
It's hard for me at my day job literally to get text messages in. So whenever I'm doing this, I'm literally walking to the porch. That's kind of where my platform was whenever I got to be a moderator with you is, I'm trying to make this to where all my trading, I mean, I think my first trade last week or two on the desktop. So for the last 2 years, 99% of my trades have been on a mobile, on the go, or if I'm downstairs in the back room with the kids. So I'm literally putting in, I mean, I look at it often, I pull my phone up, refresh it, but as far as the trades, I mean, there's minimum time I even have. So literally walk into the bathroom, I make my video sometimes in the morning for 5 minutes, how to review your portfolio and get it out there and put a trade on. So
he's
not
Mr.
very
Mobile.
often. That's why when I started this, I said I need to make this to where I can do this and still work. I said, or I'm just going to go back and stay with my buy and holds, which is still where I find, my love for. So I always said if I can't make this and still work and do, being able to do something good. That's why I always ask for these, Google, because I can do it all on my phone. I got pretty much my phone's my desktop. I got all my spreadsheets on there. I can pull up my analyze and stuff. And but yeah, it's minutes is what I try to do a day.
He's crazy mobile. In fact, in the last few weeks, I think Brian has kind of pushed the dust off of his not even old desktop just to, like we've gotten into some platform things, and he's just super mobile. And I'll ask him mobile questions. I know I did a CL trade a few weeks back, and I'm like, look, Brian, answer this. I'm on the mobile. He's like, what? You're doing a trade? Like he couldn't believe I was even doing a trade on mobile. So we're kind of opposite. I'm like Mr. Desktop. He's like Mr. Mobile, and we're both trying to merge those things into our routine a little bit.
Well, that's what was good about when I retired in 2021. All of my trades prior to then was I was trading when I was working with the government. I mean, I traded in the bathroom, I traded lunch. I never did it on company time, so to speak. But I was doing everything mobile, and it was a learning experience for me to come then back and start my YouTube channel and start trading things on the desktop. But now I think I prefer desktop, but I'm certainly proficient on either one.
More, I'm realizing desktop's a lot easier, to get trades on. But yeah, that's why I made a video on too. Is I can with how I'm trading, the simplicity wise, I can do 6 trades. So 1 week I do 1 hedge every Friday, and I can do 2 trades, whether it's multiple tranches or not. So I can get it down to where I'm trading six trades a month, and that's all I have to really do. So it's pretty minimum. So as far as that, yeah, it's pretty. Keep it hands free, and I got a 3 and a 5-year-old, well, 2 and a 5-year-old, almost 3, and they take up most of the time if I'm not working. So I can't give too much time to that. Plus now with the Discord and all, so I'm pretty stretched. So trading is actually the least time I put my time to.
Now I know Ed's story with this. Have you ever chased the 0 DTE? Have you ever got that bug and went down that rabbit hole?
Never, ever. I don't think I've ever put on anything less than 30. Well, I put the 14-day hedge on, but that's pretty much a cost of the business. That's the closest I've ever gone was 14 days. Yeah, I never. I always said I would if I had more time, but again, like you joke around, you need to wear a catheter doing 0 DTE. That's not for me.
I'll wait until someone out in Discord land finds the Holy Grail, and then I'll follow their path. until
What's your holy grail right now, Ed? Tell us
my
what
holy
your
grail. Well, you know
yeah.
me, I'm fixed income on my base stack, and then I stack my other strategies on top of that. I'm doing a spy put campaign. I'm doing it in 1-1x fashion right now. Um, Meaning I do 1-1 something. I've been doing some 1-1-3s up to 1-1-6s with the put debit spread different widths. So it kind of depends on which account I'm doing it in. I'm trying to keep my SPY exposure somewhere around 1x notional. So if the market blows up, that's not really a risk. I just have to liquidate the fixed income and buy the SPY at those strikes that I selected to trade. And then the rest of the leverage is the things that Brian referred about the 14 DTE edge. As I get into more of that 120-day stuff, and I usually trade SPX, not ES at the moment, because I use the buying power, blah, blah, blah. You guys are familiar with that. I'll just kind of leave that short right now. But so I'm trading an SPX 111, which I notionally set up like an ES 112. And as that campaign builds, I feel more urged to hedge it. And so I'm actually working on a trade now where I might put some type of hedge on with every 111 that I do in SPX. Just to have a campaigning of a hedge going. I haven't exactly figured out the trigger point of when I need to do it and when I don't. So I'm kind of doing it about a third of the way into the campaign. I start adding the hedge in, but I haven't quite perfected the hedge yet. Brian needs an on-demand, like not on-demand, an all-the-time hedge.
Yeah.
He's cranked up so high. He's cranked up on leverage, so he cranks up on that hedge as well. And whereas mine, I'm like, sometimes I'm not even at 2 times notional, so I don't really need a ton of hedge, but it's starting to come into play more. And shockingly, I'm actually looking at other underlyings right now that I'm trying to look to see that hopefully that can be campaigned. I don't know if they can go into a campaign or if I'll just do those selectively when the opportunity arises based on elevated volatility or what the chart looks like, something like that. Just non-SPX complex type trades. And so that's pretty much what I'm doing. I'm still keeping it relatively low risk, trying to target somewhere between a 9 and a 15 or 16% return. I have different accounts targeting different amounts with different amounts of leverage in those. So I'm kind of just still going down that path of low risk cash flow. I want good monthly. I'm extracting money from the accounts to live on.
It's
We
actually why we bumped your notional up on it almost at 2 because we realized you can't have a monthly income.
Yeah.
If you're just selling puts at a cash secured, you're going to incur some drawdowns. So we know that putting put debit spreads on help with those drawdowns, but they also cost a lot of money for your account. So
exactly.
It was always notional. That's where he got his name from. But we realized that if he's going to run with put debit spreads and have that protection, that he needs to kind of open up his comfort level to go and be a wild man and run 2x versus as 1x whenever here I am running probably 20, 25x leverage, but is what it is.
But again, I'm doing it on the vast majority of my
that's right.
And you're doing it on a piece. So
less than 10%.
I really, I just don't have it in me.
We joke, I think, but along with Bobby, but we realize what your MO is.
Well, what your two guys too, for anybody listening and watching, is that you guys are in 2 entirely different life stages too, right? With you in the 30s and Ed in the, so y'all are at 2 different life stages. Ed can be a little more conservative and probably needs to be a little more conservative, and you in your 30s can certainly ramp it up some, right?
Yeah.
So that's like me. Even though I'm retired, I still have to ramp it up a little bit because I've got kids. Yeah, I'm only in my 30s too. Right. So, you got to ramp it up a little bit.
That's actually why we started too, because, he always said yin and yang, and, he was kind of mauling out different stuff. And here I am kind of a raging bull, a little bit more aggressive with stuff. And that's why we thought would be a good combination with the Discord, being able to tend to the people that are kind of already, shall we say, made it, where they're trying to just conserve and preserve more so than anything. And I'm trying to be on the growth end of it. Even my buy and holds, I'm still trying to target. I'm growth tilt. I'm not really so much on the value side of it. So that kind of.
So with your new channel, your new Discord channel that you guys have launched, are y'all pretty much 50-50? Have you had any business arguments yet? Have you had any disagreements yet?
Spreadsheets.
We really haven't had any big arguments. In fact, I would say probably 95% of the things that come up, we're in agreement on already. And then,
Hey, if I don't, I know what the consequence is, so I have to agree anyways.
Yes,
okay.
yes, Ed.
Yeah,
Whatever you
yes,
say,
Ed.
Ed. Yes, Ed.
Maybe there's some stealthy management going because of my tyrannical methods. Anyway, I'm not really a tyrant, but yeah, I would say that Brian, because he's younger, he's kind of more in touch with some of the technology things. Not that I'm inept, but he's much more mobile, efficient, and just has different viewpoints and angles. And we are kind of a yin yang because we are covering literally the opposite ends of the spectrum. Brian is purely interested in growth, and I'm purely interested in capital preservation and extracting a better than fixed income return off my assets. So Brian's growth mode, either through the vast majority of his buying holes or his high leverage account, which is growing for his future needs. Whereas, my little nest egg is what my nest egg is, and I'm hopefully not going to have to go back into the workforce and reestablish myself from ground zero doing anything. So it's important for me to have that security for my principal, and yet again have a better return than just the 5% or so I can get out of fixed income doing these strategies in a relatively conservative way allows me to earn that 9 to 15% return with what looks like not too much risk. I'm certainly less in the risk pool than most people are that are dealing with these options the way we see them being traded across our Discord world anyway. So yeah, we kind of are covering a different little sector of the population. I usually do have more appeal with the older crowd. And Brian, I guess, has a more of a universal appeal because they're people my age that want to trade like he's doing to try to maximize their growth or their cash flow in their retirement. And so we're kind of able to cover all the needs of everyone from that standpoint as far as, the areas that we delve in, I think.
And how did y'all come up with the name, Contemporary Wealth Management? How'd y'all come up with that?
I don't know, Brian, how did we come up with that?
I don't know. I said I think we should have something with wealth management in it, and I think he and Mo came up with the contemporary part. So
yeah,
I think wealth management. I don't know. He said I might give the wrong impression because we're not manager. We are managers of our own money, but we kind of he does real estate, and I think he's going to dabble into that, and buying holds, and just I don't know. It's kind of wealth management. It's kind of what I came up with, and he came up with the contemporary part. So
yeah,
real crazy story behind it.
And probably one thing that we all need to probably show and pull the curtain behind too is business development, right? I think there's a lot of interest in the trading world in business development, especially trading as a business, the whole thing around trading as a business.
One of your first videos was about that. I remember that caught my attention whenever you made how you went into some details. Kind of I wanted to learn more about that. So it's something for you to think about too. But even one of your first videos as a subscription was about trading for a business. And I thought that was pretty interesting.
Yeah, because everybody that's in a cubicle doesn't want to be in the cubicle at the bathroom trading. Everybody wants to.
In a machine, yeah.
Yeah, they want to be doing this for a living. And if we have, now I'm not sure that we have, but if we have developed a strategy where you can feasibly make 20% a year, if you use the rule of 72, if people want to think about it, you would double your account in 3.6 years without adding any capital to it. So if people are kind of extrapolating along, how long till I could actually do this for a living? That's kind of one way that you could look at it. If we have developed something that you could do 20% a year on.
Oh, I think we do. We just got to be, still adapt, learn, and grow. I think we're onto something. We're all putting efforts in, so that's the dream. Every day I wake up, I think, when am I going to have to stop waking up at 5:30 in the morning, put on my blue jeans and go, do my day job. I'm a blue collar guy. It's kind of tough work. I'm 35, but, I've been almost doing it for 20 years. It's kind of like every day, it's going to be, I think, 15 degrees tomorrow. Do I want to get up to do that? I know I have to. So this is just one way to get to the end of the rainbow.
And you were probably like me when you talk to your coworkers about what you do. I mean, their eyes just glaze over. They're just like,
Oh
Dude, I
yeah.
don't want to talk about
You know,
this. All I'm looking for is going on Friday and drinking a cold beer after I get off of work, right? That's what
that's
people
all.
are worried about, and they don't even
Hundreds of
think about this
people at
stuff.
work. We have an annuity, and it pretty much goes into like just a money market fund.
Yeah.
Probably talked to hundreds of people. I'm like, move your annuity over, get into some S&P 500. Probably two people out of the hundreds I talked to ever kind of contacted me and says, "What do I do?" I try to reach out to a lot of people, even just in my everyday work life, and that's why I was telling Ed, the many people I print up packets for. I'm like, read this. Here's what you do if you put in just $1. And every 7, 10 years it'll be $2. If you can't get people to think, and think on
Yeah.
a bigger scale, it's hard to do. So I got to the point now where I talk to people in daily life. This is what do I do? I consider this my first job. It's my passion. My day job is where the money comes from, but it's not where my head's at when I'm there. So when people ask questions, one second, babe. When people ask questions, I always say, okay, I'll help you. I said, make an account, and how many people come back and, make an investing account or something. Not very many.
Oh, I love that you got kids in the background too. It's not just
Yeah.
me. Y'all hear kids and dogs in my house. I love it.
Oh, yeah.
Yeah, let them come on
And she's
radio.
running
That's
around
good.
shirtless too, so it's just like,
Oh, my kids do that too. I'm like, my kids are like, I'm like, do y'all like clothes at all? Y'all never wear clothes. I don't know what the deal is. They take after their daddy, I think. That's the way, because I've run around just in my. Lily said, yeah. So, and do you fuss at your wife while you're on a video like I do?
no,
Like, man, silence yourself, woman. Get in the kitchen. There's dishes that need to be washed.
she
You
comes
do
around, she
that.
tiptoes. I always try to get her to talk to Ed, and she's like a little shy. You, so it's the
Well,
opposite.
Yeah,
Beth used to be
sometime
shy.
in 2024, we'll get Brian's wife on
I hope.
screen so I can say hello to her.
Yeah, that'll be nice. Because Mo has come on like when Ed and I were doing
Yeah.
his mentorship. She would come on eventually, and it was kind of neat having her on there and stuff. Because y'all are like me too. I know Ed is able to talk with Mo about SPY, and Ed is
Oh
an
yeah.
asset accumulator, and she likes the SPY stuff. But as far as options and trading and all that, their eyes glass over too. They don't.
Yeah.
They don't want to hear.
Yeah,
They just want to make sure
I
they
think our
handle.
spouses try to be polite as best they can, but even Mo, there's like some magical limit where she's like, all right, I can't
Yeah,
take
I've
anymore.
had it. I've had it. Right.
Whereas it kind of flows through our blood, we can't really get enough of it. So it's pretty.
Well, the thing that I do like this about a business, though, is we don't have to rent office space. We don't have to have employees. We don't have to do all the things that you would traditionally do. We don't have to house inventory, even though we hold inventories of trades. We don't have to worry about advertising in order to sell or to close our positions. There's a market that's eager, available, and waiting to take our trade on the other side. And to me, it's just the perfect business. The only issue is we just have to manage the risk of it all. And as long as we have risk management in place, then we should be good for the long run.
That's the hopes.
Yeah, I think so. And look, we don't have any work clothes costs either. Let's not forget about that.
That's true. I mean, how many times y'all see me? I wear the same clothes every day. Honest to God, I'll wear the same shorts. I'll wear the same whatever. I mean, it's the same thing. I'll sniff it, make sure it smells okay, and I'll go on. But I do change underwear pretty frequently. But other than that, man, it's just whatever it is, it's kind of what it is. And
Be our own bosses. That's what we want to do.
yeah. Everyone wants to be their own boss, and it's really, really great. Well, anyway, guys, listen, I have enjoyed this today, and I wish you guys best of luck. I just wanted to come on and do a little session with y'all and kind of talk trading and kind of talk business and to encourage y'all on y'all's path with your Discord channel. People would say, Bobby, you got your own Discord channel. Why would you be on with Ed and Brian talking about their Discord channel? And it's like, we're not competitors. What we're trying to do, I really believe this, is we're really trying, even though, yeah, we do ask people to subscribe, and it's because what Brian said before. I have gone to many, especially a teenager or college student, and said, I will take you under my wing. I will teach you what to do step by step. I will give you the tools to learn to trade so that you will not have to eventually work for someone else. And invariably, they all quit. They never keep on. So if we all just gave you a Discord room and said, hey, come on in, it's all free, you really wouldn't stick with it. It's the accountability, and you pay it a few bucks every month, keeps you engaged, it keeps you going. And so I wish you guys the very best of success. We are all here to try to equip people to be better traders. I always say that I'm the worst trader on the planet, but I ain't as bad as I used to be. I'm a lot better than I used to be. And
Bobby, yeah, I'm sorry.
and I appreciate the job that y'all are doing and trying to educate and to share your wisdom with the world.
And we want
Appreciate
to
it,
thank
Bobby.
you. It's been a pleasure having you on, and we appreciate the nurturing and support you've given us. It's been way over the top, and we really can't thank you enough. So thank you for that.
Bye, everybody. Y'all be good.
Bye, Bob.
Thanks.
Thanks.
Bye, everyone.
Everybody.